The Kotak Emerging Business Fund is led by Pankaj Tibrewal, who has a long association of over 12 years with the Kotak AMC. He has built a strong track record on the funds that he manages at the AMC. Tibrewal also gets the support of a strong and stable research team who are well ingrained in the Kotak philosophy. The manager runs the fund on the basic premise of ensuring that the portfolio is well diversified and aims to reduce liquidity risks by investing in quality businesses that are unlevered. The focus here is on investing in growth stocks that have sustainable competitive advantages. Tibrewal scouts for companies with a strong brand name, business, and market share, and typically avoids stocks with corporate governance issues. He prefers to invest in businesses that are scalable and have the ability to generate steady cash flow and have good management capabilities. Although the portfolio remains tilted towards growth-oriented mid-cap stocks, the fund also carries an exposure of 10 to 15% each in the large cap and small cap segment. Tibrewal's stock picking prowess leads to a portfolio that's loosely aligned to the benchmark and is positioned to take advantage of growth in the domestic economy. Basic materials, consumer cyclicals, and industrials have historically constituted a major portion of the portfolio. Financials has remained underweight, mainly owing to the fund's underexposure to NBFCs and PSU banks. The fund runs a significant overweight in basic materials in industrial sectors, mainly owing to a positive view on the cement and home improvement sectors. Some of the manager's significant off-benchmark stocks include positions like SKF India, Thermax, and Kajaria Ceramics. The manager's positive view in the cement sector is reflected by way of his holdings in stocks like Ramco and Shree Cement. Pankaj Tibrewal typically buys into stocks at a low exposure and builds positions based on the company's visibility of growth. This leads to a slightly long tail on the portfolio. We also find that a few of his top holdings, like Supreme Industries and Schaeffler India, could take longer to liquidate as compared to some of his other holdings. We think that liquidity is an important aspect that investors should be wary of while investing in a mid-cap fund. Overall, we think that the fund has remained a consistent performer year on year, falling in the top 2 quartiles in terms of its performance. Although it did suffer slightly in 2020, this was largely owing to the underperformance within the financial sectors, with stocks like IndusInd Bank, RBL Bank, the Federal Bank, and Axis Bank contributing to the fund's underperformance. On a cumulative basis, the fund has remained a consistent performer, with the fund manager being able to maneuver the fund across market cycles. The fund's up capture and down capture ratios are slightly higher as compared to its peers. This is indicative of the fact that the manager is taking on a slightly higher level of risk to generate additional alpha. On an overall basis, we think that the fund stands out on many counts. Our conviction on the manager and his stock selection process leads to an overall rating of bronze on the growth share class and silver on the direct share class of the fund.